Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 25th of January 2020 and we're publishing our gold and silver weekly update for the week ending the 24th of January. Gold rose $14 last week from $1,557 to $1,571, having hit a high of $1,575 and a low of $1,541. In sterling terms, gold finished the week at £1,201. That's up £5. And in euros, it closed at €1,425. That's up €21. Silver rose 8 cents from $18.03 to $18.11, having hit a high of $18.15 and a low of $17.64. In sterling terms, it closed at £13 and 85 pence. That's unchanged. And in euros, it closed at 16.42 euros. That's up 0.17 euros. Thereby, both of these, gold and silver, showing the weakness in the euro this past 7 days. The gold to silver ratio rose from 86.3 to 1 to 86.7 to 1. The Dow Jones closed on Friday at 28,989, down 170 points on the day and down 359 points on the week. And the NASDAQ closed at 9,314, down 87 points on the day and down 24 points on the week. And the S&P 500 closed at 3,295, down 30 points on the day and down 34 points on the week. Brent crude closed at $60.69, quite a large fall, down $4.16. And WTI crude closed at $54.19, that's down $4.36 on the week. The dollar index stands at 97.85, now that's up 0.25 for the week, which has surprised many. Now we concluded last week's update with the following words, quote, "So next week we're still expecting the vacillations in gold and silver prices as mentioned earlier within the price bands already quoted. Watch the US dollar now for the next week or two, as this will probably have the most profound effect." Well, yes, we are seeing gold vacillate within the $1,500 to $1,600 level and silver within $1,750 to $1,850 level. So the position really is little changed overall. But that said, as appears to be often the case, Fridays have the largest effect on gold and silver prices, seeing gold peak for the week and closing just $4 below that peak. So what actually happened on Friday to cause this? Well, do you remember our weekly update last Saturday when we quoted the following? Quote, "There are also headlines concerning a mystery virus emerging in China, with official figures quoting 50 confirmed cases of the new coronavirus, but UK experts estimate a figure nearer 1,700 with the virus being potentially identified in 3 countries, China, Thailand and Japan, and this could just be the start, with 2 people having already died from it. We have often stated to watch out for geopolitical events and black swans, and a potential for an epidemic virus transferring across borders could indeed prove of concern, though at the moment it is nowhere near the so-called bird flu epidemic. But let's keep an eye on this, as economically it could have significant effects." Unquote. Well, now it appears that this virus is spreading quite rapidly throughout China, faster than expected. And also 2 cases have now been uncovered allegedly in the United States, and a number of infections in other countries too. Even today, this morning, Saturday, President Xi Jinping of China told senior officials, according to state television, that, quote, "the country is facing a grave situation," unquote. Now, of course, the media will hype this up as much as possible, and some have questioned whether the stock market's falls on Friday weren't just using this virus as an excuse to take profits. Now, we suspect that until the true level of the contagion is really known, which may actually be some weeks, the uncertainty will continue to unsettle markets as people reminisce of the previous SARS virus, causing some 8,000 infections and nearly 800 deaths. China has already reported on Thursday 17 deaths from the current virus. So we've seen a move from 2 to 17 in under a week. Now, despite this fright, the dollar has actually strengthened. And despite lower yields, and gold has pushed up from what technical analysts call a cup and saucer continuation pattern. This suggests higher prices short term, and we can observe that there is support near the 10-day moving average of 1557, with resistance of course being January's high of 1611, though we would suggest that exceeding 1600 because of its psychological as opposed to technical level will be the first major hurdle. The RSI, the Relative Strength Index, is positive, while medium-term momentum is negative. Now, many analysts are of the opinion that higher gold prices, certainly in March, is very likely, perhaps even seeing gold touch the 1700 level. And next week we shall give our prediction on this for gold and silver for the year, but we won't be giving too much away if we said that the downside is certainly more limited than the upside over the next few months. Now, silver prices rallied towards the end of the week, just like gold, breaking above the Thursday technical hammer, which is a positive sign, and especially breaking through $18 and holding, despite its major fall at the start of the week. Again, we're of the view that this week we'll see silver performing moderately well and gradually grinding upwards towards that 1850 level, which many analysts predict that if this is surpassed, then $19 is certainly well within sight. The 50 EMA line is situated at 1762, followed by strong support at 1750. There is resistance, however, at 1860, so above the 1850 level that we believe the vacillation will occur, followed by quite severe resistance at $19. Now, last week, the market manufacturing and services PMI for January were announced, with manufacturing falling to a 3-month low, while services strengthened to its highest level since March. The flash manufacturing PMI fell, in fact, to 51.7 in January from 52.4 in December, while the services PMI actually rose to 53.2 compared with 52.8 in December. Please bear in mind that any readings above 50 indicates improving conditions, and the flash reading, and the reason they call it flash, is because it's based on approximately 85% of the final number of replies received each month. So it's not the total figure, but it's 85%. Now, by contrast, and in separate reports, the UK economy returned to growth as the IHS Market Composite PMI climbed to 52.4, up from 49.3 in December, so quite a rise. And the Euro area manufacturing PMI added 1.5 points to 47.8, its highest reading since April. Now, these figures are quite important, and especially if they continue, as they may suggest that silver, which has been in the doldrums, could actually gain an uplift, especially if manufacturing is beginning to improve, and therefore its demand from an industrial point of view could also enhance its price. Too early to tell quite yet, but again worth noting on our radar. Now, taking a look at what economic data this coming week is likely to have an effect, well, it's quite substantial. On Monday, we have new home sales for December. Tuesday, durable good orders for December and core capital goods orders for December. We also have the Consumer Confidence Index for January. Now, on Wednesday, We have the advanced trading goods for December, but more importantly, the FOMC announcement on interest rates, and then Fed Chair Jerome Powell's press conference immediately after it. Don't miss that. Thursday, GDP for quarter 4, and on Friday, personal income, consumer spending, and the core price index all for December, and also consumer sentiment index for January. So a very heavy data set this coming week, with all eyes, of course, on the Fed FOMC announcement on Wednesday. But perhaps more than the announcement, more the comments. Now, we shall talk more about this in tomorrow's video. So, we are expecting slightly firmer precious metal prices next week, or particularly at the beginning of the week, with Jerome Powell perhaps setting the tone thereafter. Now, we wish to add at this point that in the past few days, we have spoken about the issue of climate change and how this has affected and will continue to affect the investment agenda, as well as the political agenda. And we think it appropriate to explain why here for a brief moment. But these videos that we've produced, we have placed in the description box below if you haven't so far had an opportunity to hear them. Now, without attempting to try and teach anyone to suck eggs, as it were, there are vast amounts of capital swilling or swashing around the globe looking for a place to invest, hopefully protecting asset values and providing a reasonable return on investment, and in an ideal world providing an additional capital gain. So protection, income, and capital gain are the three basic fundamental requirements for investors. Now, everyone knows that government bonds generally, while secure and protective, either have a low or in some cases negative yield and limited capital gain potential. Equities generally are in a bubble, and whilst the bubble can get larger, some sectors will burst or deflate before others, while some sectors are in a major growth area, such as defense, utilities, and green or environmentally friendly industries. Now, whether one agrees with those blaming man for climate change or those agreeing with controversially Greg that it's all bunkum really doesn't matter at the end of the day. It's the direction that, as we've learned from last week's videos, politicians, bankers, and investment managers are turning to. And it is important, and we cannot underestimate or underquote this, it is important that those of us who collect, stack, or invest in gold and silver and precious metals have some idea of the competing arenas for the available capital out there. How often have we heard said, if only every single person in the country or in the world bought 1 ounce of gold or 1 ounce of silver? Remember Bitcoin and cryptocurrencies? We're absolutely convinced that if these did not exist, we would have seen gold prices in particular, followed by silver prices, either reaching or nearly reaching all-time highs, not now, but a few years ago. As much of these monies invested in cryptos would certainly have been directed towards precious metals. Now, not all of them, but a fair proportion. So anyone who places critical comments on our videos, particularly when we discuss things such as climate change and equities and so on, stating, quote, "We thought this was a channel about silver and gold," unquote, please bear in mind that we are a little wider thinking, and broad-shouldered than that. But there will always be a link of some sort to our underlying reason for the channel. Gold and silver do not operate in a vacuum, and it really is never ever as simple as basic physical supply and demand calculations. And that is why we cover some of these other areas. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Look out for tomorrow's video where we talk about the Fed's FOMC potential decision and the factors it will take into account. Also, please, if you haven't already done so, listen to our videos on climate change and alternative investments. And finally, later next week, we shall be publishing our gold and silver forecast for 2020. Have a great weekend. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.